Hello and welcome to ESI Focus, where we dive into a specific sector of the esports industry with special guests. My name is Kerry Wananen, Head of Multimedia Content at Esports Insider. Today, I'm coming to you from Portland, Oregon. I've been all over North America on this specific mini-series, but it is my pleasure today to welcome Patrick Mahoney, co-founder of We Are Nations, and Jordan Hamburger, partner and head of mergers and acquisitions at Sheppard Mullin. Today, we're going to be talking about investment within esports, and this mini-series is brought to you by law firm Sheppard Mullin. Sheppard Mullin represents athletes, influencers, and content creators, media and marketing companies, tournament operators, venues, and investors in a variety of matters in and outside of esports. For more information, visit sheppardmullin.com. Jordan, Patrick, pleasure to have you today. How are we today?
Doing well, man.
Happy to hear. For those that maybe don't know you, Patrick, could you start with an introduction of how you formed We Are Nations and how that developed into Nations Ventures, a esports investment venture?
Yeah, the quick story is it's sort of a series of realizing there was a need. So we started Nations about 5 years ago off the back end of our music merchandising company, because we found there was a need to separate these esports clients and teams and leagues and things that we started to work with from our music clients. There was some differences, certainly in the front end, and how you would deal with a band versus an esports team. And once we identified that, it made a lot of sense to start its own company. Fast forwarding to last year, we found there was a need in the space to maybe help shore up some adjacent parts of the business, or do what we could to help. I like to use the word mature parts of the business, and so we started the fund to make investments in all of them have been sort of pre-revenue or early stage in not so much merchandising, though we do have a few merchandising investments, but sort of adjacent investments. Another one of my favorite words that could help our core business. So marketing or data or things like that hoping that eventually all this sort of settles in and ties together and makes for a strong ecosystem.
And Jordan, as head of mergers and acquisitions at Sheppard Mullin, of course you're involved in things both inside and outside of esports, but could you introduce a little bit about what your department does and a little bit about yourself as well?
Sure, happy to. So you're exactly right. My practice and my responsibilities at Sheppard Mullin, go beyond what we're talking about today here with esports and, mergers and acquisitions, and I think more specifically capital markets and financing. So my day-to-day is doing M&A and capital markets transaction work across the middle market and lower middle market, helping ecosystems of all different industries realize ultimate value through acquisitions and dispositions, joint ventures, and financings of all different flavors, from, seed, venture, crowdfunding, exchange listing. Several years ago, a couple of my colleagues that were very focused in the esports industry asked if, myself as a seasoned practitioner in the area would join the team and help bring that sophistication and experience from, the prior industry verticals into the nascent esports space, which was something super exciting to me. And I'm sure this is a story told many times over, but from, childhood, before ever dreaming of becoming a lawyer, I was playing video games and loved sports. And I've always been fascinated with watching how, new industries unravel and find their way and take steps forward and steps backwards and ultimately settle into a place that's, viable for the casual fan to the high level, engaged amateur to professionals in whatever industry we're talking about. And so, it's just been really great over the past few years getting involved in these transactions and watching as the industry propels itself forward.
Yeah, I think it's also very interesting of what we all have in common and what the next generations are not going to experience is that we have a time where we have the experience of there was a time before esports. We had a childhood where there wasn't esports growing up, where there was no such thing, that video games really was something that you would just do maybe with the kids around the block or by yourself or whatever. And now it's such a global phenomenon, and the ability to connect with anyone all over the world and really compete at very high levels is very novel. And I think there's a lot of novelty in the esports industry in general. But I'm curious, from your guys' point of view, is it because of this novelty that has shaped how the investment landscape has become, because so many new people have entered the space, or because it didn't exist just as short as 20, 25 years ago? I'm curious to hear your perspectives about what has helped shape the current attitude around investment into esports. Before there really wasn't. Of course, before there wasn't esports, but earlier, investing into esports maybe had nothing in return to offer. So I'm curious, now that we've been seeing so many new investments, in your opinion, how did that begin, and how has that led us to where we are now? Patrick, let's start with you.
Well, speaking from personal experience, it's been relatively easy. On the music side of our business, we've never taken a penny of investment. And quite frankly, a merchandise company that makes T-shirts for bands isn't. I don't consider that a very sexy investment, anyways, being totally honest. But when we started the esports business, and we didn't even know this, right? But when we started, suddenly we were introduced to a whole new sort of group of people, investors included, that were, interested in what we were doing because we were in esports. And, really our business didn't change a ton. You need to do merchandise a little bit different for esports, but, at the end of the day, it's still merchandise. But, we were able to raise money over a series of small investments. We didn't take a lot, but it was something that we probably never could have done on the music side. So my sort of personal experience is that, it's still very much the sort of the dating period, right? And people are getting away with a lot more, and people are being a lot looser, just generally a lot of let's see what happens, which is fine, right? You've got money coming into companies because they're in esports, taking a sort of an idea that already existed in broadcasting, merchandise like us, but it's an esports that makes it attractive. And then the thing I've heard on the franchise side is you've got, you want to own a sports team. This is a relatively inexpensive way to come in, and if it blows up, then you're a genius. How long that will last, I don't know. I think it's still out there. We've had no trouble finding people. We're looking at doing another round this year, and we've had no problem, engaging and contacting people, and the interest is still really high. I think you're starting to see, little cracks. And the reason I bring that up is not to be negative about it, but I think because, it's good to know that, because I think as someone that may be seeking funds in the future, you probably want to start making some adjustments to your pitch, starting soon. But I think generally it's a very bullish market. It's still very much, like I said, in that sort of dating period, and there will be an adjustment soon, not yet, but soon. And it's certainly, if anything, an exciting time.
Yeah, I completely agree with that, Patrick. And so, from my perspective, what's going on here is similar, but, it has its differences to what you see in any emerging industry. At the beginning, attracting capital is not as easy. And it comes from, I call it endemic, within, and trying to get capital from, outside and from more professional or sophisticated or long-standing sources is more difficult. You mentioned, I think, Carrie, already, the fact that there's not a lot of profitability out there or consistent profitability. So getting people comfortable making investments where there is an immediate return, takes a certain type of investor. Thankfully, that's something that the venture capital universe has been doing for a long time. So it's well suited for venture investment. But you gotta figure out what you're doing when ultimately how is it going to monetize? How are you going to get a return on investment? And that's not something that's proven yet. And so, Patrick talking about cracks, I think about it as steps forward and steps backwards. Early on, there weren't a lot of choices for where to get capital from. Now you're seeing a lot more choices and some very sophisticated, private equity and large banking institutions that are willing to make investments. But you're also seeing pullback by some that have gotten in, can't figure out the model and how it's going to monetize. And so then they're pulling back. And for the benefit of the industry, long term, I think it's incumbent on all of us that care and are invested. And I don't mean with money, but I mean with the idea that we're all working collaboratively to create an environment that can attract and retain that capital. I think that the volume of activity, the level of interest, the number of people engaged so far outstrips the return right now that it's going to be the key to how do you unlock that in order to get where we all want to be. And I think that's a very interesting challenge that I'm watching play out right now, is taking all of that activity and energy and fervor, and particularly as it's accelerated during the pandemic, and turn that into realizable investment and return.
So what do you think then would be interesting ways for investors to see this? You mentioned, or I guess look at it. You mentioned that there's such fervor and such fanfare around esports, and it's a very highly engaged audience. What are some, in your opinion, what are some opportunities for investors to say, okay, maybe I can not only financially, but also invest in the idea of esports to help grow and not necessarily give runway until a steady revenue stream is found, but to give more space for potentially new investments that weren't there, let's say 6 months ago to a year. What do you see there, Jordan?
So, I'll kind of pick up on the first part of your question, because I think I can answer that. And the second part is a little bit more challenging for me, so maybe Patrick will be able to hit it. But the benefit of going first on this one, I think that it's experimenting and it's exploring and it's, moving beyond the idea that I think was the early days of investing in the teams and investing just in the highly competitive, most professional level. I think that's going to be the last, place that really turns into an investable avenue and a profitable avenue. I think it's everything else building down from that, where you can get money in, put it to work. And even if you don't see a return, a home run, a big success, a liquidity event in your first investment, you can have milestones, you can have progress, you can see good ideas and good teams executing, and then put more capital, behind that and do, multiple rounds of investing instead of something really big once and then you don't see what you want from it and then backing away from it. But I think there's so many opportunities to invest, and looking at what Patrick's done is a perfect example. I mean, merchandise, social media platforms, venue organizers. I mean, there's just so much going on out there, streaming services, influencers. There's so many different avenues into this industry and into this ecosystem where you can take knowledge you have from things you've done elsewhere and layer it on top of this and make smart investment, let that money go to work and just rise the whole system, whether you're doing headphones or chairs or jerseys. I mean, there's so many opportunities because of this highly engaged audience. I think people got caught up early on too much, and it's got to be in the teams, it's got to be in the players, it's got to be in, League of Legends Europe or whatever the hottest, published titles are. I think that's a place that isn't really ripe for most of the investment opportunities right now. So let's support it from the ground up, and then ultimately that should take shape. And I think that'll ultimately take shape with much bigger institutional type of plays because of the ecosystem you need to support that. The backbone is much more substantial from a CapEx and all sorts of other perspectives than these other avenues that can be tremendously profitable. And quite frankly, I think are much more interesting and closer to home.
Yeah, Jordan, totally right. I mean, it's to me, esports is unique for two reasons. One is it's disruptive as heck. It's disrupting everything, which I love. But you don't always have to reinvent the wheel. And I know there's a lot of entrepreneurs out there that maybe don't want to hear that, but you don't. And I think esports is a perfect example of how those two things can coexist to a very successful sort of formula. Maybe an oversimplification, but the way I look at esports is you really got two areas, right? You've got the teams, which are the brands, and their sole mission should become strong, well-known legacy brands through what they do, which is competition, right? And then you've got everyone else, all your services, like Jordan was saying, the streaming and the merchandising and all of that. And that's, again, not reinventing the wheel, because it happens at the NFL. It happens everywhere. That's basically it. And so as an investor, you kind of need to know what you're getting into. So when you invest in a team, I mean, I hope money keeps coming into the teams. It will. But I think as an investor, you have to say, okay, well, it's part of my mission to help them create this brand. I mean, creating a team should be about making a legacy brand and taking, no compromises, period. You are your brand from now until ever. And that's how you're going to create value in your organization. Winning helps, but Manchester United has had some bad seasons, right? So but they're still a massive brand and always will be. And on the service side, it's again knowing what front end needs to be different for esports and what wheels don't need to be reinvented. But as someone that's gone out and raised money, I've focused on sort of explaining the parts that investors are familiar with. I mean, we do spend time on how esports changes our business, but they get really comfortable when I start talking about supply chains and how we sell to retail accounts and all that sorts of stuff, to the point even where we've had our banks finally coming around saying, oh, well, you have accounts receivable. I'm like, of course we do, because sort of an amalgamation of stories, but because we sell product. It doesn't matter what's on it, right? And so I think that's where the benefits are is sort of as an investor, sort of understand that you're coming in on a basically this sort of mission to create something. So whether you choose services or you choose the team, there's a certain attitude you have to do. And as someone that's seeking money, you want to make people familiar with what's different about your business, but also what's best practices that's been pulled over from other industries.
Yeah, what you were just talking about, Patrick, of when you're speaking to investors, being able to speak their language in a way, like really have them understand, while maybe they don't understand esports in general or the tournament structures or whatever, they'd certainly understand a merchandising business or a service in a way, and how these things sort of work. Because esports is so young and still really finding itself really as an emerging market, is in your experience, does that make it more of an attractive market for investors, or is there more hesitancy because sort of waiting to see what happens, because maybe it's a bubble that will burst, maybe people are really investing in one avenue, but it turns out that something discovered a couple of years later is the profitable, or like the new meta. What's your experience in relation to people's interest based on how young the industry is?
Well, I think Jordan hit that nail on the head a second ago. I mean, it's like true. Esports seemed to start with a very much a venture capital mindset, and there was just a lot of pushing money onto black or onto red and seeing what happened. And there's, but now there are certain businesses and maybe certain segments of the business, and Jordan can speak to this better than I can, that are moving into, like you said, those the access to more sophisticated, money. My personal experience there is I'm now talking to private equity, for example, because I can show them EBITDA and I can show them revenue and I can show them sort of growth and things like that, which is something that took some time to get to, but so to me that's a maturation from our fundraising efforts. And like I said, Jordan will know, but there's probably other businesses and other segments out there that are going in that same direction.
Yeah, I think that's exactly right, Patrick. And Carrie, you teed it up with the way you asked the question. I mean, where the investors can identify the commonality with things they've invested in historically and, outside of esports, they can get a lot more comfortable a lot, more quickly, because they got folks, back there, that are the analysts that are running the numbers on the spreadsheets. They've got the folks that are the operators that know how the supply chain connects to this, connects to that. And, they've got the folks that are thinking more C-suite level and within the investment funds, right? And you've got to check all those boxes. How does it work analytically? How does it work from a real true, like getting down to it, ROI? We speak about ROI, more encompassing, but true return on investment. So you got to have that part of it addressed. You've got to understand the operational, you've got to understand the management components to it. So when you can bridge that, it makes it easier for folks in family offices, folks in private funds, and then beyond to be willing to put capital in and then help them understand the differences. So what I've seen in the last 6 to 9 months is, the streaming services, the merchandise, the infrastructure, the backbone, and accessories. Those are areas that are more easily attracting the different, I'm calling more sophisticated. That's not necessarily fair, but the funds and other investment opportunities that weren't seeing before that. They're still having a more difficult time, getting their arms around agency and teams and leagues, because that is very different. And what I've seen is, particularly with high net worth and family offices that have had experience investing in traditional sports, when they've thought they get it and are going to make that investment in esports, they very quickly find out that they didn't, and they're two entirely different animals. They often feel like they don't know what they got into. They maybe got a little burned, and then those people pull back out. And then the hope is to keep them around the ecosystem so that they can redeploy in another way, just understanding that first foray wasn't the best right way for their type of capital or their type of experience base to be effectively leveraged in the space. But I think that's an issue that I've seen over and over again that's been really problematic for the space. Is people think esports just like traditional sports, so it's got to all work the same. And they're so massively different in so many different ways. Sports team focused around geography, sports teams having very regular schedules being distributed through traditional cable and network. There's so many things that make it where the media rights and the consumption patterns work from traditional sports model that don't work with esports, which is digital, which is available when you want it on, YouTube and Twitch and all these other things. And teams aren't tied to geography, and you've got so many different leagues and different games and different rules. And so I think, you really have to appreciate the differences and not get hung up on they're essentially the same. And then you can start unlocking investment opportunities or understanding them and deciding whether or not to make them on that front.
And Patrick, you were mentioning Man United, how Man United maybe has had some bad seasons before, but the brand is very strong, and the brand knows what it is, and the brand, stays with the course. While in esports, there's been so many rebrands or teams or orgs come up and then disappear, or and then come back, and maybe there's something different. Is there any possibility that perhaps more investment, if it's a possibility, more investment into orgs would sort of force their hand to stay a certain path rather than waffling in not necessarily in terms to meet the new trends, but just of trying new things or really moving to a new market in this way of saying we're investing in this and this is sort of what we expect. Do you think there's any possibility there?
Yeah, I think the teams probably need to be more careful about where they, and I understand they always can't be, but in a perfect scenario, be careful where they take their money, because we've seen money come in that come with conditions. We'll give you this money, but you got to change your name, which is like kind of the worst thing you can do to a brand, pretty much. Maybe they'll reset and they'll just become a new brand, and it's still early enough, and all that's fine. But I'm a little bit, again, to be fair, full disclosure, I'm going to be a little bit biased on this because I make merchandise and I like my IP to stay constant and predictable. But I do feel it's sort of part of our role is to help these teams find that brand voice, through merchandise. So that's, I think that, but the irony is, and if you're coming in with sort of like, money that could be more transparent, I guess would be a good word, is like, I think the irony is, and again, Jordan was right when he said that traditional sports is a very set way of how profits come in through broadcast, through everything else. Esports doesn't have that. We all have to figure out how to get around the idea that football is owned by no one, but the game is owned by a publisher. I mean, that's a big part of this, right? But I think the irony is because technology was disrupted even before esports, through social media and on what you can do online. The ability to break through with a brand sort of decentralized and asymmetrical like esports brands are is actually easier than it ever was, long as you do it right. So there is a positive. Every equation has two sides, and this side here is it's totally different, but the tools existed to break through.
Hey, Kerry, can I steal your job for a second and ask Patrick to get into that a touch more? Because I think that's fascinating. And I imagine the audience will want to hear it, because I'd love to hear, you talk a little bit more about that, Patrick, the idea that, even though it's decentralized, and we're starting on this digital platform, that there are ways that it's easier, because something you said really right before that resonated with me, which is, you start from merch and, that IP and building brands is critical to you. And I think, you've done something brilliant with your venture fund and putting investments into other places in the ecosystem, and you're doing it because you want to earn a return. You're doing it because you're supporting others. But you're doing it ultimately, I believe, also just to help the whole ecosystem continue to develop and grow. And it's no shame in saying, so I'll say it right, because then ultimately your core business will have a place to flourish and do better. I don't know that I've seen or quite heard anybody explain, how this dynamic, challenging, amazing marketplace can actually present opportunities that are, I don't say easy, if that's not the word you use, but I'd just love to hear a little bit more about that.
Well, I'm not a marketing expert. I don't have a lot of social media followers or a TikTok, but anecdotally, there's plenty of people that do, right? And they've started at zero and they've gone to wherever they're at on their own, without the help of a marketing agency, without the help of on the music side, say a record label, and so many examples of that. And that's because those tools sort of exist either free or sort of as all you can eat, right? Or as you pay as you go, right? Which changes the whole dynamic and brings the barriers of entry way down. And it just becomes about being really savvy, So, those are the opportunities. There's people out there that are way better at cracking that code than I am, but I know that there's a code to crack. That's the answer I have for you.
Get the right influencers on your side.
Yeah, or the TLDR. Just get the right influencers.
Yeah, and I think not only on top of that, but esports has sort of really proven that as using tools that are there at a very easy to enter, let's just say price point, and exploiting the possibilities that you can use with such, we'll call them entry-level tools, and then expanding in this way in terms of social media growth, in terms of content creation, in terms of creating these processes to become basically media organizations as they develop and grow, and then turning that into a merchandise pipeline and all these sort of things. I think the whole industry has really benefited from, at least in the tech world, they call sort of like no code. Like, you don't need to know how to build this. You can just use it, and the functionality, you can make it work for what you need to do. And I think what you're saying, Patrick, really encompasses that. As a sort of last question. Oh, go ahead.
The other side of that too is I think you've got the first sort of generation of consumers that are willing to be reached in a decentralized, disruptive way. I still, if you want to get me, email me, like text. You don't do that, but I still watch regular TV. My son doesn't do that. There's still attorneys out there. I don't know if he's one of them, but that won't take a digital signature. But there's this whole going forward group of people that have just decided that's the way it's going to be, and they're just if you know how to reach them, they're willing to be reached in a whole different way. That's what I think creates this sort of organic not bubble, but it's just gaining steam.
All right. Any last thoughts on that, Jordan?
No, I think we've well covered that one. I know you had another question coming our way, so I'll let you keep us on track.
Yeah, my question was just that so let's say you're on as an organization or a business, you're on the way to cracking the code as best you can, and you really need a little boost to make this sort of project that you're working on really shine. And so if you're seeking investment, what do you think, maybe it'll vary wildly by business, but in both your opinions, I'm interested to hear, is the VC route sort of the end all be all, or we've also seen successes in crowdfunding or even entering the stock exchange? I'm curious to hear maybe some pros and cons for each option from you guys.
Sure. You want me to take a crack at that one first, Patrick? So it's a spectrum, right? And at one extreme, I think is, your seed, followed by your venture. You got your crowdfunding fits somewhere in there. Then you get into private funds and institutional money. And then at the other end of the spectrum is the exchange listing. And I think that for the most part, the way in which you frame the question, Carrie, and the model you're talking about, exchange listing is probably going to be the least likely. It's got the longest lead time to get ready to get listed on exchange. I mean, it usually takes a good year to get to a place where you have the financials, the internal compliance and reporting, the sophistication that the street is going to expect in, communicating with them regularly and all of that. Depending on where you are, if you're here in the States, you're going to have SEC reporting and compliance obligations. I don't know Canada as well for a Toronto Stock Exchange listing, or London, the LSE, or some of the Asian markets, but they all come with a high level of reporting and compliance that's time consuming and costly. The pros there is it's high profile. It gives your brand a level of validity that, it's really tough to get any other way. And the amounts of capital you can raise and the ability to go back to the well, as long as you're on message and you're performing, it creates an amount of capital that's outstanding. But I think in my experience, In this industry right now, the number of candidates for that is fewer and far between. So then, you jump back to the other side of the spectrum, which is your seed financing, which can be done, through friends and family. It can be done through high net worth. It can be done crowdfunding. And there you're looking at, smaller dollar amounts. You're looking at likely folks that have some level of expertise or knowledge that can be helpful in addition to the capital. And I think that's an important thing to think about when you're taking in the money is what else do they offer other than just the money? The pace at which you can raise. Sophisticated VCs that have invested in the space can move as quick as anybody. So, you can get money in 30, 45 days. Other capital raising processes take longer. The amount that you have to disclose or not disclose, so that transparency varies. If you're going to go to a VC, you get under confidentiality. You're talking to one group. They've got a reputation. You know that they're not going to be sharing your confidential information. Crowdfunding, on the other hand, can probably raise you similar amounts of money to VC. It can take longer, just depending on the uptake and the engagement from the marketplace, but you're putting yourself completely out there, which can be a good thing or a bad thing. And there's also some securities law compliance issues that I won't get into the technical here, but that you need to be very mindful of as a company. You don't want to go out crowdfunding without engaging with counsel that can really help you navigate so you don't wind up running afoul of securities laws. The last thing you want to do, when you're at that point. But I think it really depends on where your company is, how much money you need to raise, what you're going to use it for are some of the key factors in figuring out where on the spectrum you hit. And what you're going to use the money for, the value that the particular type of investor can bring. In addition, again, as I said before, just, the money. I've seen some family offices bring some great value to investments, similar to like VC does. And I've seen crowdfunding done really well in conjunction with a VC round or a seed round that's done the friends and family. There's a lot of different tools. I think sophisticated or experienced counsel that's done it a lot and having conversations with folks like myself can help you figure that out. Talking to your peers who have done it. It's a process, and you want to inform yourself before you make a decision.
What do you think, Patrick?
That's great. All great advice. And the only thing I could really add to that is maybe two perspectives as sort of a business owner, as someone that's seeking capital and watching all that unfold. I just basically echoing what Jordan's been saying, but we're still very much in that sort of VC / private fund world for a big chunk of the business. Don't know a bunch about crowdfunding. I've always sort of felt that it's pretty cool, almost as a, if you can get a metaphor going, as if you're trying to create a community in your business. It's like a cool sort of extension to that. But I think generally speaking, we're still looking at that VC / private fund. I do see publicly listed companies coming in stronger later. Eventually, someone's going to go be the Live Nation of esports, right? And do a big consolidation of a bunch of service companies, as an example. And that makes sense as a public company. From the sort of investor side, I can say really what we look for is a great idea that could use money to just sort of scale that great idea. That to me is a little bit outside of the scope of the question, but I think it's like anyone listening, it's like your idea has to be awesome. I'm going to help you scale it. I don't know if I want to use my money to create a good idea. Come to me with that good idea.
Right. And I mean, that's sort of where it comes in with the whole elevator pitch, right? Of knowing how to present this great idea in this industry, or taking, learnings from other industries to move in here. I think you guys really offered our audience some really, really great advice and also insight in terms of the investment market. And that also wraps it up for our time that we'll have together, gentlemen. Thank you so much for being on the show. Where could people find you, Patrick, online?
I have a Twitter account. It's at _rock. It's sort of semi-private, but follow me. As I disclosed earlier, I could use some more followers. And then my email is just patrick@wearenations.com.
And Jordan, where could our audience find you online?
You can get me on my email as well, which is my first initial J and my last name Hamburger at sheppardmullin.com. You can come to the Sheppard Mullin website and find me there. You can find me on LinkedIn. And my kids are ashamed, but I'm on Facebook. I haven't made my way to TikTok and Instagram, IG, I guess I'm supposed to call it. But please come find me. Happy to chat and help folks invest or take investment in this space.
And speaking of Sheppard Mullin, again, a big thanks to Sheppard Mullin for supporting this mini-series on legal intricacies in the esports industry. I'm Kerry Wananen for ESI and signing off.